Hello and welcome, and thank you for joining us on Business Incorporated. I'm Chimezi Obi Iwago. On the show today, Kenya seeks 150 billion shilling syndicated loan. Saudi Arabia deposits $250 million in Sudan Central Bank. Plus, AFDB approves $98 million financing for Ethiopia-Djibouti road project. We get the show started now with the markets, and Nigerian market has continued to bleed, trading 0.16% lower at intraday. The JSE index and EGX 30 were in the green, 0.57% and 1.37% higher each. Kenya closed in the red on Tuesday. And major Gulf markets rebounded today, mostly on back of their financial shares after U.S. President Donald Trump dismissed fears of a prolonged trade dispute with Beijing and China's central bank stepping in to stabilize the yuan. At intraday, Dubai's index traded 1.23% higher in a boost from real estate stocks, which all rose. Qatar's index traded 1.23% higher after 6 days of straight losses, as most of the companies traded higher. In Saudi Arabia, the index rose 1.18%, with Al Rajhi Bank adding 1.1%. In Abu Dhabi, the index gained 0.74%, snapping a six-session losing streak. And in Europe, stocks traded higher in the morning as fears over the intensifying U.S.-China trade war cooled slightly on the tentative stability of China's currency. Well, let's bring in Ulrich now for more from the European space. Hello, Ulrich. Good afternoon.
Hi. Good afternoon, Jimmy. How are you?
I'm good. The trade dispute between the U.S. and China is still center stage on European markets. Larry Kudlow, Donald Trump's economic advisor, pointed to upcoming bilateral talks as a source of confidence. He says the door is open for additional negotiations. Was that able to calm investors?
Yes, that's calming investors, and of course also together with the stabilization of the yuan that you already mentioned. But you know, the gain in European markets, the DAX here is gaining just shy of 1%, and London, Paris, Milan are also up. But those gains are nothing in comparison to the losses of the days past. And I talked to a banker today, and he said that this was a rebound, nothing more. Not a recovery, and that he was very skeptical for the market. And when you look at other voices in the market, Goldman Sachs from Wall Street, they're saying they no longer expect a trade deal before the 2020 election, where Donald Trump is going to be running again for U.S. president. And Morgan Stanley also sounding pessimistic. More tit-for-tat tariffs could tip the world economy into recession. So those are negative voices. So along with going into equities in a careful way, investors are continuing to flee into safe havens in a big way. Gold reaching over the level of $1,500 per ounce today, and sovereign debt, German debt, for example, German government bonds continuing to be very much in demand. The yields, for example, for the 10-year paper, Germany, a new record low.
In other news, bad news from Germany. Industrial output dropped more than expected in June. Is that stoking recession fears for Europe's largest economy?
It sure is. You hear that from several analysts. One economist said that he assumes that the German economy is going into a technical recession. That is, there will be 2 quarters in a row with negative growth, that is, with shrinking. And it's just clear that being so disproportionately, overproportionately dependent on the fate of the export economy, Germany is very susceptible to be suffering at the moment from the trade conflict. The industrial output did grow in July by 0.3%, but people were expecting a much better result, and so this is not good news coming from a very important part of the German economy.
And in earnings, good news and bad news for shareholders from German corporate heavyweights. We have Continental, Commerzbank, Bayer, and Lexus. Tell us more.
Yeah, Continental providing some bad news for investors. The profit sinking by 41% for the quarter. This, of course, due to the lack of an upswing in the auto industry. Continental is a tire supplier and auto parts supplier being subject to that. But the damage not quite as bad as people thought, not more negative news than people expected. So that share is going up a bit. Whole different story at Commerzbank, a very bad quarter, and the share is going down by some 4%, 3.7% at the moment. The Commerzbank, yes, they did make a quarterly profit, but basically only because the tax bill was unexpectedly low, and it's also saying that it's reserving more money than before on bad loans or possibly defaulting loans, so all this does not spell good news for investors. The share dropping to not all that far from a record low. Good news, on the other hand, for Bayer and Lanxess. Bayer needing good news. They're being embattled by the whole story around Monsanto and how much money that's costing them. But now they're selling a joint ownership subsidiary, joint ownership with Lanxess, a chemical park operator, Currenta. They're selling that to a Macquarie unit for about $3.9 billion. That's great news. Investors think the Bayer share is leaping upwards by about 6%, and Lanxess is also climbing a lot.
Well, thank you, Ori. It's midweek. Let's continue to keep a tab on those earnings coming in. Enjoy the rest of the day.
Thank you, you too.
And in Asia Pacific, stocks traded mixed today as investors kept a close watch on the Chinese yuan amid an escalating trade dispute between the U.S. and China. Mainland Chinese shares declined on the day. The Shanghai Composite shared 0.32% to about 2,768.68, and the Shenzhen Composite fell 0.427% to around 1,483.95. The Japanese benchmark Nikkei 225 slipped 0.33% to close at 20,516 points. South Korea's Kospi closed 0.41% lower. In Australia, the ASX 200 ended its trading day 0.64% higher. In Hong Kong, the Hang Seng Index fell 0.14% as of its final hour of trading. And U.S. stock index futures were slightly higher this morning amid simmering trade tensions between the world's two largest economies. At around 6:10 a.m. Eastern Time, Dow futures indicated a positive open of more than 45 points. Futures on the S&P and Nasdaq were slightly higher. And signs that China is stepping in to steady the yuan appeared to help soothe investors' concerns of a global currency war. It comes after a period of heavy selling pressure at the start of the week. On the U.S. data front, weekly mortgage applications are expected at 7 a.m. Eastern Time, while consumer credit figures for June will be released at 3 p.m. In corporate news, Centerpoint, NRG Energy, and Teva Pharma are among some of the major companies set to report their latest quarterly earnings before the opening bell. Now, Booking Holdings, Fox Corporation, and AIG are scheduled to report their latest figures after market close. And away from the equities market there, and back here on the African continent, Saudi Arabia has deposited $250 million into the Central Bank of Sudan to support its financial position. The deposit is part of a package with the United Arab Emirates worth $500 million announced in April. Both countries pledged an overall $3 billion in aid, with the rest going towards fuel, wheat, and medicine. The deposit is not a grant to Sudan, but rather a loan. And Kenya has sent out invitations to international commercial banks to subscribe to a syndicated loan worth up to 150 billion shillings. The Finance Ministry set a budget deficit of 5.6% of GDP in June, for the 2019-2020 fiscal year, targeting to borrow 324 billion shillings, or close to half of the shortfall from external sources. The loan, which will mature in 6 years, will come with an interest rate of 645 basis points above the LIBOR interest rate benchmark. Under President Uhuru Kenyatta, who took office in 2013 and was re-elected in 2017, total debt has rose to more than 50% of GDP from 42% of GDP. The government has defended the increased borrowing, saying the country must invest in its infrastructure, including roads and railways. And the African Development Bank has approved a $98 million financial package for Ethiopia as a road transport corridor project to neighboring Djibouti. The project's total cost is $255 million, comprising an AFDB grant of $98 million to Ethiopia's government and an AFDB grant of $5.3 million to Djibouti's government, plus a co-financing contribution of $151 million by Ethiopia's government. The project will enhance trade by significantly reducing transport costs, thereby accelerating the economic growth of Ethiopia and its neighbor Djibouti, as it is part of the main import-export corridor. And some traders in South Africa's business capital, Johannesburg, say they are unhappy about the manner they have been treated by the police following a raid to confiscate counterfeit goods that resulted in a violent clash between police and business owners late last week. And on Monday, the Minister of Small Business and Development visited the business district to engage with the traders as well as the police on what may have caused the clash and how to prevent a recurrence.
The streets of downtown Johannesburg remain tense after a violent police raid. Informal traders working in this part of the city have expressed outrage at the manner in which they were treated.
Well, in the apartheid times, we were brutalized by the apartheid police by taking our things. But what was better in those days is that in their brutality, they arrest you so that you must have to go to court. In the new democracy, the only thing that is happening now in this country is that the Metro Police is taking your stuff and you are not arrested.
A Nigerian national who has been trading in Johannesburg for a number of years says foreign nationals have a role to play in the South African economy.
When the foreigners came, there's no job. They decided to take over street trading businesses. It's not to say that there are no South Africans doing that, but we have more foreigners doing those businesses because the reason being why, no jobs for them, and they need to survive. So they created that as a platform to survive. So they started with trading on the street and everything, and like here, they don't get grants, they have no support system.
The Minister of Small Business and Development, Kubuzo Taveni, has disputed allegations that the raids were fueled by xenophobic motives.
There was not a foreign mission there. The police were going to deal with a situation where counterfeit goods are said to be sold at particular instances, and they were going to raid and confiscate those goods, as is a requirement of the law. It is irrespective of whether it was sold by a person from Somalia or a person from Zimbabwe or a person from Soweto or a person from Sibasa, where I come from. The issue is that they are selling counterfeit goods. So let's remove the nationality of persons. Is the illegality of the act that it took place, and also the illegality of the stoning of the police.
Channels Television asks, what happens to the confiscated goods?
The normal procedure is that when these goods are confiscated, they are exhibits and they are stored in police custody. Detailed record of the exhibits are kept at the police station. And once the investigation is completed, at that stage we will determine whether it needs to be handed back to the owners or it needs to be destroyed.
The hustle and bustle continues in the streets of Johannesburg as government engages in more talks with informal traders. From Johannesburg CBD,